shares. The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here on this Wednesday, the 13th of December. We're looking at the Dow up sharply, up 4. I guess I should just do this quickly before. Actually, I haven't got time. I wanted to show you this. I was doing this, and folks in the den saw. In the Chapman methodology, we're always looking for 4 higher peaks. That's where other things can happen. The objective is to go from a buy signal, identify a low bar, get a buy signal, see that buy signal upgraded to a buy mode, and the moment you say buy mode, it means it should be at least 4 higher peaks. Sometimes you can go to a D, that's A, B, C, D. The 4th highest peak is D, 5th highest peak is E. Sometimes you go to a D and very quickly go to an E, and then either you continue higher or immediately fail. So in this particular instance, look at this. Objective, peak D at least. So what did we do? We had... I wonder if I should show it now. Yeah, so we had, I'll just show this, what we're looking at right now is at about 9:20 this morning, it went to a peak E. That was at a 4180 round number. Sorry, it was right here. Give me a second. Just trying to move my mouse. Right there. We had that sudden spike up to a peak E with that news, economic news at 8:30. Bam, goes up to an E at 4180, pulls back, and then starts to fall above the 14-period moving average and the 9-period moving average. All of these I'm going to be discussing, and we're going to be trading on Thursday. That gives you support, and what does it do? It starts a brand new buy signal to buy mode that goes underneath it, and I'd already drawn in the rectangle formation. This is something I always do. And it went to peak A, peak B, held that support, walked the 9 EMA, went to a peak D and a very quick E, and that was at a lower high, and that was at about 41.54, round number high, pulls back, and this is where we are right now. It really takes a tumble and rallies 618%. I will be using, I was asked if I would include Fibonacci, and if I can, do any of the Gartley patterns that Larry always uses and talks about so well and uses so beautifully. I will try to do that when I can. In the meantime, back at the ranch, it went to another peak D after that single leg down. It really went to a trough B, but there was just barely a little trough there. Trough A on the way down, troughs on the way up, its peaks. Went to a D, arched over, and what I did is I drew the left side, right side price. That's bar symmetry. I would have done it a little differently because of the speed of going up and the way it looked like the speed will be on the way down because of the stochastic. And lo and behold, in a shorter time frame, it went underneath the low that was made at 9:39 this morning, 9:38 at 4111.25, spiked up to that 61.8% level that gave you a peak D, and it came tumbling down. But there are still people that either didn't have a chance to short or didn't have a chance to cover, and new buyers are coming in. You can tell there's a lot going on here. So you can see each new buyer. This one I think will fail a little quicker than that one, and then we'll be monitoring. But look at this, peak E in the twice. In the 1-minute chart, this is a 2-minute chart, went to a peak D. The 5-minute chart, there's a peak E, and a peak D in the 10-minute chart. These are all techniques that I'll be discussing in great detail on Thursday. We will have positions to put on, as well as I'm looking at what can we do. I'm looking for fairly low-priced instruments, maybe 3 times long or 3 times short or whatever it is, to do some trading in between as I'm discussing and going through. Where did I put it? Let me just do that. I'll find it. That will be right. Yeah. I'm even going to talk about the 2-click session. Is today a 2-click session? Maybe it's a 4-click session. And the 2-click session says, if you are able in the early morning to go click long or click short, there are times, and there are enough times throughout this particular year that we've seen, I would say I'm going to be conservative, and I'm going to say at least once to twice a month. So there are about 30-ish days where you could have clicked in the morning, either long or short, and done nothing but maybe monitor it through the day, but not get out until the afternoon, late afternoon, or even at the close. Today, I'm suspecting that there was a move to the upside, and that if you were able to short anywhere near the top, that could be your second 2-click session, and that would be short, and you wouldn't have to cover until later today. Doesn't tell you how far it's going down, anything. So these are things we're going to be doing, working on, and discussing in great detail. I show particular instances of peak D and discuss Chapman wave methodology of what's required, what tools you just need to put these tools on your platform. You don't have to use them all the time, but you can even go to the naked chart or just use a couple of moving averages. Look, this is a particular chart that went peak A, B, C, D, and within 3 bars it went to a brand new high, which could be E or A, alternative count. Well, that went to another D. It pulls back sharply, goes to another peak, A, peak, C, D. Huge move from 94 down to 24, and then starts a brand new peak, A, B, C, D, and even now it's having a very nice rally. So these Ds are potent. All right, let's get out of this and get back to the market. This doesn't give you any clue just yet as to what's going to happen. We'll go to charts in a moment, but I want to finish this and so that you can see where we are. Look. I did this in the update. Let me just do it right now. IND, Dow just went to a new recovery high. It went to 34,712, pulling back. Now there's a question. Is this a peak E or is it a brand new leg B to the upside? Why? Because there was a gray. I always call it gray if it's underneath the previous major high. So this is a gray A, and I'll change the color because if I'm talking about it, I need to demonstrate it. But going to a new recovery high means that I have to consider that this is an old D goes to E and maybe a brand new B. Well, we've been long the Dow. We are still long the Dow. We are long the 3 times Dow as well, the UDOW, trading at 64. That's about 48 or 49% gain. We've already taken some profits off. We kept the core position. I spoke about possibly going to the 3 times short in the next day or two, depending on what happens. Nothing yet. I'm not even considering it at this particular point. The day is young. But there's a chance that we've just had an explosive, a kind of a emotional spiral to the upside, and it's almost like it's a kind of gap that is a culminating gap. We don't know yet, and we'll see what happens. In the meantime, back at the ranch, what we're looking at is how nicely it's gone to a leg B in the weekly chart. It's done it many times before, not outside the Chapman wave inside track. And all I can say is the weekly and the monthly charts are really moving well. Can you believe the Dow's at 34,420, all-time highs at 36,952? I would say 2,500 points. What am I talking about? 24? Yeah. Wait. 2,400 points away from an all-time high in a big bear market throughout the year. That's pretty impressive at the moment. I'll be back. Basil Chapman. Dow's up 424.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the market's open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Sign up for Basil's live webinar airing this Thursday, December 15th. Basil Chapman will be hosting his first ever live trading webinar just in time for the holiday season. While Basil will focus on the S&P E-mini futures, other symbols from gold, crude oil to natural gas and more will be traded as appropriate. Basil will demonstrate specific Chapman wave techniques as well as answer questions live. Spots are limited and Basil goes live Thursday, December 15th. You don't want to miss it. To sign up, visit the front page of TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Although the patterns that I talk about all the time are, let me just move this away, straight lines, arches, and cups. All the time. That's what you're looking at in the market. That's what it's made up. And sometimes the cup could be a V-shaped pattern, but you're going from one level down and then back to that level, or one level up and then back. That's red because it's an arch formation. Within that context is a pattern I talk about, which is the dreaded H, meaning that if you take out the left side low, usually after a peak A or a B, you can go down quite sharply. If you hold, you've got 3 bars in which to hold the left side, it means that you're trying to form some kind of a base. Well, look at this. It goes up and makes an arch formation, comes back down, straight line down, and then an arch. But this is a lot more than an arch. It's like a pyramid really, although I've got it as an arch. And it went all the way to a D. And that says that even though it's going to pull back, if it takes out the left side low, it's probably because it's already used up so much energy to the upside, but also it takes away energy to the downside for some reason. It can hold and then bounce. What happens on that next bounce is really important. So let me show you this pattern right here. We've got the E-mini 1-minute chart, comes back down, takes out that left side low for 3 bars. You got my rule of thumb is it has 2, maybe 3 bars in which to hold and get above the left side high. If it can do that, that means it could rally, but it'll only rally. If it doesn't take it out, it means it can rally all the way to the top of the arch. If it does, then invariably it's going to fail below that, maybe at a doji candle or a moving average here, went to the 14-period moving average, then turned around, and then formed an even smaller H pattern. Look, there's the dreaded H right there. Now we're watching this closely because it's getting closer and closer to what? You don't even need to use these things. You put it in your chart, and the moment it starts to show up, you say, aha, all of a sudden, I'm looking at the 200-period moving average, and now I can get rid of all these because they're not, for me, they're not important anymore. These Fibonacci levels, for this particular case, it'll be important for the next one, but not now. What's important is the 4101 level in the 200-period moving average. Remember I said there's a chance that this could become a second 2-click session. You had this one huge one. If you managed to get it, you had time after the E-mini was started moving up. We're starting at 8:30 on Thursday. I'm not sure if the news comes out at 8, economic news comes on Thursday at 8:15. One of the days a little confusing is 15 minutes early, but we'll be ready at 8:30 to do whatever it takes. If we miss a big move initially, it's okay. There are plenty of other things that happen after that. There could be a failure. There could be a restart. Anything can happen. But this 41.01 is your target right now. We're hitting 41.05, 41.04, coming down around the corner. The 1 minute chart is coming back, and it's about to hit it. It is at 41.04. We'll see if it hits 41.01 in the next few minutes. Up, there we are, 41.03. Okay, so let's just do this. We're looking at our different chart patterns, and we've got gold had a spike to a new recovery high away from the 200-period moving average. Tell me, is this something important? I'm going to spend time on it on Thursday, because why? You need to know what these moving averages do. The 9, look, green, goes green on the GDX. Let's go to the 7th of November at 20, let's go to the high, 25.25. It's still green, and we just hit 30.45. But if I do a measured move like this, and I'll teach you about this, look what happened on the vertical analysis using the MACD stochastic unbalanced volume and relative strength, a little gray line over there, to the move today. So I'm monitoring this really closely because there's a chance that the gold could be pulling back just a little bit. Let's just see if we hit that 4101 level. 4101. Bam, we're at 4098. So these are the patterns that we're going to be talking about. From the moment it crossed negative, let's just go to, we'll use the 1 minute chart. Moment it crossed negative yet again, right there at 4128, it's been negative. Your indicators are negative, so you stay in the sell mode until they change. And it went to this is going to be the support level. It probably hangs around, bounces around the 4101 level, watching it close. This is the 1 minute chart. It's like looking at the daily. It has nothing yet to do with the weekly or monthly. This has nothing to do with the 5 or the 10 minute chart. And yet look at the 10. Look at that beautiful H pattern that we're talking about. This is what we're going to be doing. So if you're interested at all, even if you pick up 2 or 3 techniques, let me show you a technique that I used this morning. Yesterday, I said to buy, I have stocks that I call screamers. These are stocks in the opening call, my daily newsletter, that are in the single digits, and they have a chance, if you get them just right, to get it at a particular point, and if it moves 3 to 6%, poof, like that. And then if you're lucky, you just take some of it off, so now you covered yourself for any pullback. You raise the stop to break even, and then if it hits break even, you're out, and you've made some money. But if it holds, you can hold it all the way through as a short-term trade, because if it holds that day and the next day it holds, you got in fabulously, and you're in the position. So yesterday we missed it. I said you've got to buy it before 10:20. At 10:22, the stock hitting the level that I said to buy, but only before 10:20. And the reason is I wanted that stock to pull back and then have a rally and give us exit points so that we could take some money off. And if it failed, then you're out of it, at least with nice money. And it actually did the 3% move intraday. That did even more than that. And then it failed. But we weren't in it because it did the exact opposite of what I wanted. This morning I said before, in fact, I'll do this. We had a trade. I know 1 or 2 people did get it, but that wasn't my official stance, because my official stance was we're looking at a stock, SUMO. Let me just put this in here, SUMO. And look at this beautiful symmetry, bar symmetry, a cup formation, walking the 9-period moving average, going towards the 200-period moving average. It was here. Right there, that green bar. I said, what did I say? Number 12 on my list for the Traders Corner of positions. It was trading at 887. I said, start along under 876 before 9:40 a.m. Eastern Time with a minus 0.15 stop. If long and it hits 9.16, take a small part off, New stop is then 8.74. And look at the chart and comments. When I had this here written up, in fact, for my subscribers, is exactly what I do. Today I had my Traders Corner. I had this written up. I had the Dow, the analysis for the Dow, and I had this. And I wrote it up, and I discussed it in great detail, how it should go to the 200-period moving average. It should do that very quickly. The weekly chart has made a beautiful cup formation, and the 200-period moving average is still looking terrible. But the 120-minute chart is already at an E, so it had to fit the parameters. So what happened is there was that huge spike at 8:30. Well, this got carried away, and it had a pre-market rally to about 9:15. I remember I said 9:16, 9:15. And then what happened is it took a dive. Just as the market was opening, it took a dive. I'll be back. So Dow's up 200. Now it's only up 287. Wow, what a pullback.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, JDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, Butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi, folks. So using different time frames, now we've got the 200-period moving average of the 2-minute chart at 4,078. This is kind of where you start to see really important to hold support. The Dow's giving back a huge amount. It's only up 291 right now. So, okay. Where was I? Oh, I was talking about this particular position. So what happened was it came down so quickly. If you had put in the particular buy point, you would have lost 15 cents. On an $8 stock, 15 cents is less than 2%. For a real quick trade, a single, that's the risk I was prepared to take. All right, so but some people weren't able to get it because it was so quick. Maybe they got in, but maybe they couldn't get out. So it went from the 4, it dropped down to 856 level, and it screamed up to just a moment ago. Let me show you. I can just do this on the 10-minute chart, or maybe even a 2-minute chart. This is going to be SUNO. SUNO. Oh, wait a minute. Oh, do I not show it now? Why? SUMO. There it is. Look at that. It pulled back, and then it ran all the way to 9.06. So what a percentage gain that is from the 75 level, 75 cents to the 06 at 35 cents. So that's the kind of thing that I like to do. But in this particular case, if everything was done, it was a 2% loss, but there could have been the same thing on the upside again. And then you raise the stop, and now you'd be out. So I like to do that, and it's under very specific conditions. I wanted to show that even though it really didn't work out, but it doesn't matter. It's the whole thinking behind it and the actual positioning. So let's go back to this ESH23. As I said, this could be a 2-click session where the high of the day or anywhere near the high of the day, you could just hold this all the way through to maybe the close. We don't know. But isn't that amazing? It's gone from the, let's just say where the 200 period move, where the 9 flipped down over the 14, under the 14 at 10:02 this morning. Let's go to the low of that 41.19. And here we are at 4,086. So even though we're talking about an hour into the session today, you could hold this possibly as a 2-click session. So that's really what I want to talk about. How can you handle that? And the way to handle it is to go to a longer time frame where the moving averages, everything moves slower. And if that gives you the sell signal that says, okay, even though at this point at any stage we could see a bounce, probably the high of the day is the high of the day. We'll see. All right, enough with that. Let's go on with our looking at the different sectors. So you've got the S&P spiked high, went to a new recovery high. Oh, I didn't mean to do that. Wrong chart. Let's go to this chart right here. There. So we want to look at, I'll just keep this. This is the daily chart stretched out. You can see in the background there is the monthly and a little bit of the 120-minute chart. But look how important this 200-period moving average has been. It went above it for about 3 weeks. Couldn't hold at a peak at 43.25 on the 16th of August. Plummets down. It goes all the way down to 34.91 on the 13th of October. Fabulous move up. But look how it's taken time. It really hasn't been straight up like a V-shaped pattern. And now it's starting to stretch out. Why? Because that 200-period moving average is the magnet. So 4,021 is going to be absolutely imperative to monitor over the next week because that's where you got your 200-period moving average, and the markets, this S&P has been unable so far to show it's got the temerity, the dexterity, and the veracity to hold sharply above the 200-period moving average. It's making the sine wave over and under like a yo-yo. So that's important. Look at the QQQ. Went to a higher high today. Is this an alternative count? Is this maybe a B? But it doesn't matter. At this point, I'm just calling it an F. It is underneath the 200-period moving average. In all of this move that's gone to the upside, it's really taken time. Sometimes time is as important as price. Time is your on your X and Y axis. This is taking time on its axis. It says, I haven't got the momentum yet for the upside breakout. If, in fact, it pulls back just fractionally tomorrow and the next day, and then suddenly by Friday or Monday of next week, it is trading over 303 is the 200-period moving average, that's going to say, whoa, we're back there again. Finally, after the August highs of 334, slumping to 254, here it is. It's taking its time, but it's getting there. The stochastic's still very weak, and the MACD hasn't yet crossed positive. It's close, but it hasn't done it yet. So we're watching it. Look at the IWM. I haven't even looked at the weekly charts yet, because until you figure out the daily charts, The weekly charts don't mean anything. So here we are. Look how many times the IWM, Russell 2000 small caps, has tried to push up against the 200-period moving average, and so far it's been failing. So I'm talking about these because these are the techniques I'm going to talk. I'm not just going to be doing the trades. I'm going to be teaching. I've got a whole a webinar plan with objectives. What is the objective of this whole thing? The Chapman wave is the waveform that never sleeps. You can see Chapman wave is the waveform that never sleeps. CW abbreviation. And one of the reasons I say that is because you can see on this chart right here that every single notation has a validity. This peak B from the low that was made at 162 says that it's starting a new buy signal, but hasn't been upgraded to a buy mode yet. It needs some other things, and finally it does, and it gets to the D. Then it pulls back. And then what does it do? It goes to peak E/B, F/C, fails, then starts to hug the 200-period moving average, and it just isn't able to get it. Let's go to gold. Look what happens in the gold contract. Nice breakout, finally getting to a D. Peak C1, C2, it's a Chapman wave technique I'll be discussing in great detail. And here it is. There was a left side, right side price time match. It failed to get there both in time and price, and then suddenly it pops above it, and that's important. We're looking at a bunch of techniques here, but most importantly, look at the 200-period moving average. It never even got there. The moment it gets there, it becomes a valid magnet. It becomes something that says, you know what? We're going to see either the arch formation like this, the cup arch keeps fluctuating, or this is going to be a significant breakout because finally, now I can show you the weekly chart, is in fact right here. There's your peak B, your leg B. This is continued, and you've got the 9-period crossing over in the weekly chart above the 14. The MACD is good, stochastics at 87. So far, this is good, and there's a chance it can close. That'll be really important. It closes above the left side high in the continuous contract of 1889. Is that correct? Yeah, 1889. That was made back in July. If it can close above it, it says, you know what? It's now forming a very strong base, and that would be in the 1780 to 1760 area, at least in the short term. I'll be back in a moment. Basil Chapman. Dow's up 207. S&P's up 53 points. Big divergence there. Be back in a moment.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi, folks. So look at the importance. I haven't been able to follow this. Obviously, I'm doing the show, so I couldn't do that. But look, the 200-period moving average stopped there, bang, at 4,082 in the 2-minute E-mini chart. And what I normally do, I did this in the, where did I do it? Was that in the 10-minute chart? I know I did draw it in. Oh, no, I drew it in the 1-minute chart. Remember, I drew in the rectangle. And normally what I would do is I grab the outside of a huge candle and I just merely say, here's your rectangle formation. But the large rectangle is probably not going to be accurate. You want to go for the smaller rectangle. So that's the hello? Click. There. That's the rectangle that we're looking at right there. The start of that second bar at 832, I think it was. And normally what I would do is we'd be drawing in the arch formation like this. I draw the arch formation, expect the peak D, and I tried to do a left side, right side price time match. I tried to make it as exact as possible, and I always like to bump right up against the cliff on the left side, resistance, and then I draw to the right side. But at the same time, I'm thinking there's another pattern that I always look at, and that is a pattern where I take the cup formation, the low of the cup formation. So this is one worked out almost perfectly right here. But normally I would take the cup formation there and go to the right side. So there are all these different techniques, how you do it. I explain it, why I'm doing it, what does it mean, what are the confirmation patterns, etc. So now we're sitting on the 200-period moving average on the 2-minute chart, and now you're going to try to get a bounce. All right, let's get back to our charts that we're looking at here. So what this particular rally says to me, for subscribers to the opening call, is that we had some positions that over the last 2-3 days, we got them because they are in sectors that I liked, that said there's a chance that these sectors could find, one of them could find strength only because it is in a dividend-paying sector, unlike the oil service and multinational oils like an Exxon, which have had their incredible move to the upside. Excuse me. These could be the ones that have from lows could have a pretty decent rally. So we wanted to be in an under the radar area. We got in, it sort of held exactly where we got it. Yesterday, one was a little higher, the other one was about where we got in. And today they're having a nice pop. What's really important is if these two latest ones that we got in, because I said, now I'm not just looking for low priced, meaning double digit or single digit. I'm prepared to go for whatever the price is. That's what I like because it's in the area. So these are triple digit stocks. And one is actually doing very nicely. It's up almost 2%. But it's not the issue. The issue is can there now be this rotation that says the stocks that we've just got, are they the under the radar ones that have held okay? And if the general market starts to pull back sharply from here, just even if it's short term, will these particular stocks show the veracity? Will they show the importance of being in sectors that were very badly beaten up and are coming back, but are coming back with some validity because their chart formations have been pretty strong? One of them had that technique that I was talking about, the Chapman wave technique, that volume price climax low, where it made the highest volume on a gap down. And that says with it should be 28 days higher above that point. And if it holds even higher through those 28 days, it can go 56 days. So it's one of those that's maybe a more intermediate term position. Maybe we take it out. I've got fairly tight stops, but that's what I'm looking at this particular phase. Look at the gold. Gold is trying to show that the number of times, the 7 or 8 times, it's actually more, 9 times, that has touched the 200 or just been at the 200 period moving average, there is a spike to the upside, and it's saying there's a chance that this 200 period moving average could start to become a propellant zone. Look at the SLV. This is a silver ETF. Alternate count, I've got it as an F right now. I don't have to change that. It can still go to a G, but it's actually way, way above the 14-period moving average in the daily. The weekly did exactly the left side, right side price time match that I've drawn in. This is bar symmetry. Look at that. From that cup high back in April at about 21.94, it plummets down to the 16s. I didn't choose the correct one. Whoops. Should have been one bar later. Sorry. This is the low. This is, let me fix that up. So that's the low, and it's 2 bars early. So it's 2 bars early. It got to 21.94. I think yesterday it was just under it, and today in the weekly chart, it is trading with a high of 22.20. Look, MACD is good. Stochastics at 91%. On balance volume is lagging, and that's actually, it might turn out to be a good sign because it says that over a period of time, it still has to get overbought. But I am a little concerned about that. But look at this. Finally, the monthly chart is hitting. There was a peak B. Look at this Chapman wave. This is the falling axe formation where it makes higher highs. Sorry, it makes lower highs and much lower lows. And then it turns around and it tries to form a V or a cup-shaped formation. Can this work out? Well, we'll see. That's silver, but I've been saying that silver has been acting way better than gold for quite some time. Is it because silver's used in the battery, in the EVs, that somehow or other there's a certain proportion like silver used to be used in the film industry for film? I don't know. Maybe that's the case, but it is acting way better than gold. And look at this high-grade copper. High-grade copper had another spike. It's gone to a leg C, a very quick C in the daily chart. Not yet an E in the weekly, but starting to improve a lot. Not great, but improving a lot. Certainly the daily chart has this beautiful cup formation. It's a little extended to the right, not a problem. And it's going right there. The target is the high that was made in the continuous contract right there. On the 14th, it went to 3.96. So copper is improving at long last. Let's go to crude oil. Crude oil is trading up a little bit. It's been making lower lows and lower highs. And that's just saying to me that the whole idea of crude oil, and I'm going to relate it just for the moment again, like I did yesterday, to the XLE. Nice big pop in the XLE, but the S&P Select Energy Spider, the OIH, they kind of go together. Made a high. Isn't this amazing? 317 was the round number high back in, was that June? Yeah, in June. It drops to the doubled bottom of 195, 198 arch formation. Made dreaded H turns into a beautiful cup formation. Screams up to a high on the 14th of November of 322.79, just slightly above the previous high, and now starting to give it back. And I'm just suggesting to you that XLE is not a short necessarily. Maybe it could have been in a very short term, 320 down to 270. That's a pretty good short. but I think it's in a big digestive phase after the huge move up, and that coincides with OIH, so it coincides with XLE. Look at that, same double top, and now it's digesting gains. I'll be back. Dow now only up 187, S&P still up 151. That's a big divergence there. I'll be right back.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month, and try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi, folks. So going back to my webinar that's coming up, this is the live trading webinar coming up Thursday. I should have had it already. Of course, I haven't got it already. But within the context of going to the front page of TFNN, you'll see right there, I'm going to get it right here, Tiger TV, there it is. Tiger TV homepage, there we are. Okay, so within this context, what we're looking at is, get it down there. There. So this is what we're doing on Thursday, a live trading webinar, E-mini S&P futures will be traded, but we'll also be adding some other things. I've also made a recommendation. If you're interested in this particular webinar, and there is something that you trade very often, send it to me. I might include it. I might just show it briefly. I might not include it as part of the trading thing, but I will definitely show you certain things that you could be using in that particular, even if it's something like an Apple or whatever. There's a lot of people trade Apple every day and some other stocks. So I include that, but I don't know if it will be included, but I'll put it into the package because we have almost 6 hours. I'll be doing a lot of work, so I can always find time for that. Meantime, but we will be doing, and you'll get my newsletter. It's $148, so that gives it to you. Plus, if you're using Tiger dollars, I mean, really, you couldn't call a plumber for 3 minutes and see if you get a bill for only $148 or whatever this will be. $300 plus you get the bonus, plus you get my webinars. I'm really trying to do this as an a trading educational program that I can give you specifics. I'm writing it all down to what to watch for, what to use. So stay tuned. You've got you got Steve Rhodes coming up. You've got great programming today. I'll be back with Tom later this afternoon. In the meantime, check out this potential webinar that you could really benefit from. It's not just trading. I'm going to be doing it so that we go through our stocks, what we're looking at, why we got the Dow the day after the low in October, still holding it, plus 3 times longer Dow. Why are these things in progress? Have a wonderful rest of the day. Check out my opening call.